Hey everyone, Adam here for Bullogic. Want to do a trade review with you on VRNG, a trade we took today. This morning, before the market opened, we always post the stocks that we like to watch that are gapping up and that we're going to watch for day trades. In that list, we also put VRNG as a watch for red to green. It wasn't going to gap up, it was actually going to gap lower. So we did put it on watch for red to green. We had somebody ask us what exactly is red to green and how to play it. So that is what we're going to cover in this video today. First thing to know about red to green is it is a trigger. It is not an actual setup. You can't look at a chart and be like, yeah, that is a red to green setup. No, it's just a trigger on the actual play itself. So the setup happens, and then when you get in is when it goes from red to green. And we're going to talk a little bit more about that in a minute. First thing, momentum stocks are the only thing that works with red to green setups. You can't go out there and just look for any chart and be like, oh yeah, this is red and now it's green, let's buy. So it's not going to work like that. You need momentum stocks. What is a momentum stock? A momentum stock is a stock that just is running like crazy and it's running on super strong volume. Just like VRNG, right now they're in trouble, or they're in suing Google for patents. Google's probably going to pay them a bunch of money to keep it out of court and just move on. So this is why they've been running. As you can see, the runs have been huge, both going up and down, and it's been on enormous volume. It has gone from 3 million to over 30 million shares traded each day. So this is a momentum stock. Momentum stocks are stocks you need to keep on your watch list every night. You need to go right now, put VRNG, and stick it on your watch list. You need to keep watching these every night and keep looking for setups. There's several great qualities about momentum stocks. One, everybody's watching them. They're easy to find in scans. They come up in the super active scans and high for the day scans, and most gains for the day. Easy to find, easy to see because everybody's playing them. Two, they make huge moves. As day traders, we don't need a stock that's only going to move 0.5%, 1.5%. We're not going to make any money like that. These things run 10, 15, 20% a day. Now, those make for some epic trades. These are the stocks we need to watch. And three, momentum stocks always set up. Whether it's on the daily chart or intraday chart, you're going to continue to set up. So make sure you keep these on your watch list. Watch them during the day. See for the setup. See if they're setting up intraday. Look if they're running, flagging, consolidating, basing. These things can really move when they start getting some momentum behind them. So keep them on watch. Let's look at another momentum stock, SRPT, biotech, that has been running like crazy. In July, it was $3.50. It is now trading for $31. If you would have had this on your watch list every night and been watching it, you could have played it over and over and over again. You could have made your month's worth of trades and profit off this one stock. It gaps up here, it flags down, breaks the flag, trade. Comes down, bounces off that 20-day moving average, breaks out, another trade. Flags here, boom, another trade on the breakout. Pulls back down to the 20-day moving average, boom, another breakout. Again, bases, boom, another breakout. Trade after trade after trade. You need to keep these stocks on your watch list. Sooner or later, they're going to die out of momentum. They're going to be yesterday's news. It's going to fall off just like this. The low volume is going to come back in. Nothing's going to happen. It's just going to be moving. Then that's when you get rid of them off your watch list. But until then, while they're making all this volume and all these setups and all these runs, you need to keep them on your watch list. You should definitely keep SRPT on your watch list because it's starting to come down and base out, and it's looking ready for another breakout. So keep that one on your watch list. Same with VRNG, another momentum stock. This morning I noticed that it was gapping down about 3%. After this big fall here yesterday, because it got downgraded, you expect it to continue its run. It almost closed at the lows. You just automatically assume, yeah, this thing's going to continue to break down. And so that's what it did. It gapped down 3%. Now, if this thing was going to break down, it's going to break down hard. Let's move to a intraday chart. I'll show you what I saw. All right, intraday chart, 2-minute candles. I told you I always like using the 2-minute candles, especially in the morning. That way I have enough. If you use a 5-minute candle, then you wouldn't have caught any of this. Use 2 minutes. It's less noise than a 1 minute, and it gives you more candles than a 5 minute. When the afternoon comes, after lunch, switch to a 5-minute if you want to. That way it'll thin it out a little bit more and reduce the noise even more. So it gaps down, VRNG gaps down. You can see it right here, the gap. Now, the one thing about this, remember how bad it was yesterday, how much it came down? So if a stock is going to continue to tank, you can automatically assume that it's going to run down another 5–10%. Momentum stocks work in both directions, both going up and down. So this stock, it went down 3–4%. That's nothing. If it would have went down 10–15%, I would have just not even looked at this stock anymore. Just moved on, looked at it tomorrow. But it did. It only went down 3–4%. It started to actually flag out a little bit here. Volume started to come in a little bit, and that's when I noticed, yeah, this thing's gonna go. So I actually set my buy-in at 438. I got in here right over these little flag area. You see it was at 437, so I got in at 438, and it started to take off. And as you can see, it went green right here. It went red. It started in the red, moved to green. A lot of people bought in here at that 446, I believe it was. That's a good point to buy into. I got in early. In this choppy market, I like to get into stocks a little bit earlier. I want to be the first one in, first one out. Makes it easier to move all the chop. So I got in early on this break because I had good chance and good probability that this stock was going to go green. It didn't tank in the morning. It just washed out a little bit. Just went a little red, 3–4%. Not a big deal, especially when the stock was down like 15% yesterday. These are just the extra sellers that were loaded into the close and coming into the open. It stabilizes, and then that's when I know it's going to have a good chance of going green. So I got in at 438. It went green, as you can see. Red to green moves happen real quick. I got out my first shares at 453. So right here in this big spike, I got out half, moved my stop to my buy-in at 438. That way I took profits, I made some money, stuck it in my pocket, and now I'm reducing my risk. I'm flattening out the trade at 438. That way, if it does come down, then I still make my money, and I'll take a loss on the last half. But this stock just kept going. It ran all the way up to the 475, but I actually got out at 460 for a nice 5% gain right here in this candle, because there's too many green candles in there. I figured it's going to come down pretty hard when it does come down. These are pretty big candles, and it's just been running up from -4% to like +2%. This thing needs to stall, and it needs to come down. So I went ahead and closed out my shares at 460. 5% trade, real easy. What did that take, 10 minutes? Real easy trade. Red to greens are real easy, but you just got to remember, they're on momentum stocks only. So make sure you're watching those momentum stocks, and they can really set up. 2, red to green moves are quick. Don't try to hold a red to green forever. You don't want to hold it for an hour. You don't want to hold it all day. They're real quick moves. As soon as it goes green, let it pop a little bit and then start scaling out. You don't want to hold on these things forever. Usually they're just real quick. Usually they'll just go green, run up 1–2%, and then start to fade. So they're good for the quick money. Don't hold them forever or you're going to end up taking losses. Real easy trade. Make sure you keep this stock, VRNG, on your watch list. It's still running with momentum. Who knows how it's going to set up tomorrow? Maybe they'll do another red to green where it starts off in the red and runs to the green. Maybe it'll flag and break out. Maybe it'll break the highs. Who knows? But definitely keep it on your watch list. Remember, for a red to green to work, the stock has to start in the red. You can't have the stock start in the green. If VRNG would have gapped up here and been green at the start and then went red and then went back to green, that's a deal killer. You don't want to take that trade. You want the stock to start red. You want it to wash out, just a little bit of selling, nothing serious, regroup itself, and then start to push towards that green level. And when it does, take the trade and make it quick. Scale out quick, take your profits, go in a little bit bigger. That way you can really hit the nice gain, but scale out quick, take your profits quick, and you'll be good to go. Hopefully that answers your question about red to green and our trade review on VRNG. Keep looking for these setups. They're great money makers.